Okay, let's start. Good morning, everyone. I'm Zakia Karim. I lead the Pangea consulting practice. Today's session is on CASS 15. So preparing you for CASS 15 and the upcoming rules that should be coming in at some point, either this year or at probably Q1 next year at the latest. So Pangea Consulting, we've got a couple of people with us. So Sama is part of the Pangea team. We might have one or two others joining. We are a boutique consulting practice specializing in CASS, safeguarding, and risk management. With us, we have a couple of people. So we've got James. I'll hand you over to James in a brief second. But before that, we have a guest with us, Irfan. Irfan joins us from Railsar. Is that how it's pronounced, Irfan? Yes?
It is, yes.
It is, yes. Excellent. And Irfan will be part of a Q&A session later on this webinar. Over to you, James.
Thanks, Zach. Hello, everyone. I'm James, the founder of JCR Talent, a specialist CAS and regulatory compliance recruiter. I'm delighted to be joining Zach today discussing CAS 15, which I know is a hot topic in the CAS world. We'll be running a couple of polls throughout the webinar, and it'd be great if you can take part. But yeah, without much further ado, I'll hand you back over to Zach.
Thank you, James. So today's session, we have a few objectives. The first one is to provide an overview of the essence of CAS 15. And with CAS 15, there's obviously the supplementary CAS 10A part as well, which is the CAS resolution pack aspect. So what it is, why it matters, so you all get a feel of what that will look like going forward. We'll summarize the key proposed rules and what the implications are for your firms and for yourselves as individuals. And finally, it's to provide some guidance and steps on how firms can prepare for the upcoming rules. So some practical steps to help you along that journey. So what is it? What is CAS 15 and CAS 10A? The context is their insolvent payment firms between, I think it's Q1 2018 to Q2 2023. There was an alarming shortfall of insolvencies in that period. And with those insolvencies, there was an alarming number of shortfalls that was recorded. So I think 65% in funds owed to clients through that period where there were insolvencies in the payments sector. Additionally, the Payment Services Regulations Review on the safeguarding rules highlighted significant weaknesses. And on the back of that, the responsibility for developing detailed safeguarding requirements, it was proposed that the FCA take over on that front. The broader sort of regulatory horizon when it comes to the payment services world and safeguarding is at the end of last year, there was a consultation paper issued by the FCA, so CP 2420. And within that consultation paper, we had the proposed rules for CAS 15 and CAS 10A. Now, why we thought it's probably a good idea to still have this session, even though it's based on proposed rules, is because these rules that the FCA have proposed in this paper, they are based on an existing mature regulation. So the CAS regulation has been around for a long time. It's evolved, it's matured, and it's come to a point. So because the regulation that's been proposed is based on a mature regulatory framework, the likelihood is that the proposed rules will probably largely go into a finalized state. There isn't an anticipation that there'll be a lot of changes, if any, actually, between proposed to final. As a result, we thought it's not too premature. I think it's early enough to be able to present something and go through the topics and share that with yourselves. The consultation paper did mention that a policy statement is expected to be out in the first 6 months of 2025. Now, we have, I think, a week left in the first 6 months of H1 of 25. So unless something comes out in the next week, I think the likelihood is that we'll be seeing the policy statement more likely in H2. I think we're looking at probably September, October, more likely, from at least what I've heard. So these proposed rules, they will apply to authorized payment institutions. So the scope of the rules, authorized payment institutions, it'll also apply to e-money institutions, with small e-money institutions having the ability to opt in. So that wouldn't be mandatory for them by default. And also the third type of firm is credit unions who issue e-money in the UK. So why does it matter? Why does it matter that these rules are now coming into play? The wider context is we have a growing popularity, growing trend of more usage of e-money and firms in the payment sector. So consumers are using e-money, and that growth has been exponential over the last 5 years or so in particular. With the increased growth, we see obviously a greater risk, a greater potential harm to UK consumers if there was an insolvency in the payment sector. So naturally, any risk has to then be looked at by the FCA or any other regulator or supervisor and sort of mitigated and addressed accordingly. And the other point we really want to mention here is the fact that the current safeguarding rules in its current guise, the FSCS, so the Financial Services Compensation Scheme, wouldn't cover insolvencies of payment firms in the current state. So if a payment services firm was to go into insolvency, there is no FSCS cover. So therefore, the risk is real, and it could impact consumers if firms did fail. Okay, so we'll start off with the first poll just to get you guys thinking about where your firm is at this stage. So James, if you are happy to release the poll.
I'd love to, Zach, but I think as the host, it has to be yourself who presses the poll button, I'm afraid. It's not available to me.
Okay, let me release that. Okay, you might be able to do it now if you try and see. I've changed the status.
Oh, there we go. Great. So yeah, this is the first poll, first of 3. So it'd be great if you can get involved in that. So how ready do you feel your company is? Just another 30 seconds. Great, thanks for everyone who took part. Quite interesting to see how the votes split, actually. So less than a third of you are rocking and rolling, and about half of you are working on it or kind of not quite there, but have had initial discussions.
It'd be interesting to see the rock and rolling crew in terms of how they're doing and how they managed to get to that stage. I'm sure others will be interested in that as well. So if we're able to get more information, then certainly we'll get that perhaps later and share that with the wider community. Okay, now if we go into the key proposed rules and implications, the consultation paper, as mentioned, proposes changes in 2 stages. So we'll have an interim stage, and then we'll have an end state rules stage. Now, the interim stage, the rules will support a greater level of compliance with existing safeguarding requirements. So existing safeguarding requirements are set out in the electronic money regulations, EMR, and the payment services, payment system services regulation, PSR. And then with the interim stage, we'll then have a sort of second stage, which will be the final stage, the end state rules. And this will replace the safeguarding requirements of these 2 regulations. The second stage, the end state rules, will address any remaining shortcomings. So from the interim stage, there will be certain risks and issues that will be addressed. The end state rules will then come in, and hopefully the intention is for that will then close any open points, any open issues, any open risks that were left on the back of the implementation of the interim rules. So if we now delve into the interim rules, there are a few aspects to it. One aspect is strengthening elements of safeguarding practices. So currently, relevant funds are safeguarded very similar to how we have protection and segregation for client money. What we will see as part of the interim rules is how there will be additional safeguards that will strengthen the current safeguards that are in place for relevant funds that are held in secure liquid assets. There will also be requirements to consider diversification of third parties. So third parties where firms are holding money with third parties, this will be strengthened compared to the current existing rules in place. Another aspect of the elements of safeguarding practices is how the due diligence requirements, so appointing third parties, this will come in and be very much in line with what is expected from current CASS firms. And finally, within the strengthening elements of safeguarding practices, we'll have additional safeguards and more detailed requirements on how payment firms can safeguard relevant funds by insurance or comparable guarantee. So that's one of the distinctions between CASS and safeguarding at the moment, is this ability to protect relevant funds through insurance and or comparable guarantee. And so the interim rules will see a strengthening of this proposition. Within the books and records, we'll have more detailed record-keeping requirements and reconciliation requirements. So currently, the reconciliation requirements are not as stringent as the CASS rules. The proposition is to strengthen it and bring it in line with the current CASS 7 rules. So daily reconciliations at a minimum, which will, of course, require substantial more effort from safeguarding firms to keep up with that. As mentioned earlier on, we have the CASS 10A aspect, so the requirement to maintain a CASS resolution pack. CASS firms out there, practitioners out there who have been in the CASS space, they can tell you, and I'm sure they'll attest, how maintaining and keeping the CASS resolution pack can be quite painful. At times it can be the bane of CASS teams, as I've experienced it at firms. So that requirement and the maintenance of the CASS resolution pack will be rather challenging and arduous on these firms. And then there's the enhancing and monitoring of and reporting aspect of it. The proposal includes a monthly regulatory return to be submitted to the FCA. So client money and asset return, not what we have in the CASS space currently. So that will just fall in line with what we've seen at CASS regulated firms. There'll be a requirement to have annual audits, so external audits by an external auditor. So again, the level of expectation will increase massively from what it is now. So there'll be only audit firms. I think currently you can have non-audit firms performing this annual assurance review. The standard will be increased as part of this proposals and once they go live in following the policy statement. And there will be a requirement to allocate oversight of compliance with the safeguarding requirements to an individual in the payments firm. So very much like how CASS firms currently have an SMF that has assigned responsibilities for CASS. Likewise, this will come in line with what we have in CASS. Now, with the end state rules, what we see is the record keeping and reconciliation requirements increases further. We'll also see more robust requirements on the strengthening elements of safeguarding practices. We'll see more robust requirements on how payment firms must segregate and handle relevant funds. And again, on the strengthening elements of safeguarding practices, there will be agents and distributors won't be able to receive relevant funds unless their principal payment firm safeguards sufficient funds in designated safeguarding accounts. So that will be a much higher requirement from payment firms moving forward. And an additional requirement is for payment firms will only be able to safeguard relevant funds by insurance or comparable guarantee. So there'll be additional requirements when it comes to the insurance or comparable guarantee method of segregation of protection. There'll be additional requirements coming in at the end state rules as well. So that evolves in a sort of two-stage process. So at an interim stage initially, and then at the end state rules, that will be strengthened even further. And the final aspect is the holding of funds under a statutory trust. So that's the main aspect that comes in at the end state rules. So this will be the imposition of statutory trust over relevant funds. So just like how we have acknowledgement letters that are in place in CASS firms, and so firms are expected to have acknowledgement letters signed with their banks that provides trust status over segregated client money. The same concept will start applying to relevant funds held by payment firms, and so with that, again, it should ensure and reduce the risk of commingling in the instance of any insolvencies, being able to distribute the funds back to firms and having clear segregation and protection over that. There should be a lower risk of relevant funds being tainted, as we've seen historically in some CASS failures in the financial services world. So what are some practical steps that firms like yourselves can take to get ahead of yourselves? As mentioned earlier, I think it's important to understand that once these are proposed rules, there is an expectation that these proposed rules will be largely kept in the finalized policy statement, the finalized rules. Certainly, there's no anticipation of any significant changes between that. So practical steps for firms conducting a CASS 15 readiness assessment. I think that's probably the most sort of practical way to approach things. So performing a gap analysis between current practices and proposed requirements. Doing a comparison of what's currently required, what's expected as part of these proposed rules, where is your firm relative to where it should be, and then on the back of that, you'll be able to then draw up a detailed program of work with a roadmap of how and who will lead those sorts of gaps and remediating those gaps and fulfilling those gaps. Another aspect is to identify an appropriately skilled and competent person to become the designated CASS senior manager. So currently, when it comes to the sort of selecting the CASS SMF, you do need to show and evidence, relevant skills, relevant experience, and competence with CASS. Much like that, with the CASS senior manager that will be designated to lead the sort of CASS the CASS responsibilities within the firm. The expectation is that there is a level of competence, skills, and experience. So if that isn't the case internally and you don't have those resources, then you need to start obviously looking at that within your firm and perhaps outside of the firm. And broader than that, it's evaluating adequacy and competency of resources across the firm. So across first line, across second line, and across third line. What are the what's the skill set what's the experience across first line, second line, third line? Does second line have enough experience and knowledge of the sort of CASS and safeguarding space to be able to challenge? And the same with internal audit in third line. Do they have the right expertise to independently review and challenge the first line's operations and operational setup? And then last but not least, of course, training and awareness. Now, this might seem gimmicky, but certainly when it comes to finding effective ways of creating awareness, communication, of course, is a very quick and easy way of making people aware of what's upcoming. Additionally, we'll have training sessions. I think having dedicated training sessions for first line, which will differ slightly to perhaps second line and third line. Even within your first line, different teams will have different responsibilities. So targeted training will really help. And of course, at the very top, your board and risk committees and so on and so forth, having training and specific sessions for those will be very beneficial for firms to really get ahead of what's coming up.
Okay, so just our second poll, just regarding today's webinar. So following this webinar, how would you rate your confidence in leading CASS-related changes within your organisation? Also, I noticed a couple of people click the raise hand button, and we do have a Q&A section shortly. But if anyone does have any questions that they want answered, if you just want to ask the question in the Q&A button, yeah, we'll try and get as many of those answered as possible before the end of the webinar. Just another few seconds. Great, thanks to everyone who took part. Yeah, it looks as though most people are somewhat confident, some very confident, which is great to see. So yeah, you know, if you're confident with you know what needs to be done over the next few months, yeah, you're in a pretty good spot. So that's great to see, and hopefully you took some useful info from today's webinar. Now I'm just going to hand you over to Irfan, who will talk you through a sort of day in the life of a safeguarding officer. Yeah, if you do have any questions for Irfan or for Zach, then yeah, just pop those in the Q&A button. That'd be great. Thank you.
Thanks, James. So, Samir, you're okay to take this session with Irfan, yes?
Yeah, no problem, of course.
Excellent.
Irfan, before I want to ask you any questions, can you give us a brief about yourself?
Thanks, Samir. Really glad to be here. I'm Irfan Elias, head of safeguarding at Railsr, which recently merged with Equals Money. We're a group of UK and EU regulated entities made up of both EMIs and APIs. My background is CASS. I've spent a number of years on both the advisory side and in-house, mainly focusing on CASS 6 and CASS 7. And moving to safeguarding and payments felt like a natural next step. Right now, a big part of my role is helping the business prepare for the upcoming rule changes. So I'm really looking forward to this discussion.
Okay, perfect. Just to kick it off, as an experienced CASS practitioner, now working in the CASS space, can you tell us an example of a unique challenge that you faced working in that space? Because you know, every situation might be different, and can you give us your insight?
Absolutely, that's a great question, Samir. Having worked extensively in CASS, the transition to safeguarding and e-money has been both familiar but also fundamentally different. One of the biggest challenges has been the lack of prescribed operational detail in the safeguarding rules when compared to CASS. CASS gives you detailed prescriptive rules around things like when to segregate, how to reconcile, what to do in the event of a shortfall, whereas safeguarding leaves a lot open to interpretation. And this creates challenges around designing controls that are both robust and regulator proof, especially across complex business models and products. Another key challenge is around data. CASS usually operates within well-defined product sets. With safeguarding and payments, there's often the need to really dig into real-time data across multiple systems, customer types, payment methods. So it adds a lot more to the complexity of things. This has meant working closely across the likes of product, tech, finance teams to really define what constitutes a safeguarding liability when it arises, and how it's tracked through the entire life cycle of a transaction. And lastly, I'd say a unique challenge has been cultural. Getting buy-in from across the business for safeguarding controls can be somewhat difficult. And this is mainly due to the fact that there is still that perception that the rules are more principle-based as opposed to prescriptive in CAS. But that's changing, of course, with increased regulator scrutiny. But there's still an ongoing shift.
Oh, that's very interesting. I think it sounds fun, like working with something new every day, a new challenge every day. Speaking of day to day, we all know like the new regulations is coming up. Can you tell us like how your firm is working to implement it, to work around it, and be prepared when it like eventually comes out?
So right now, a large part of my day today is focused on getting ahead of the proposed rule changes, and with that, the new reporting requirements. So that's meant leading internal readiness reviews across our EMI and API entities, mapping out our safeguarding flows and reconciliations, mainly to make sure that they meet the more rigorous standards that are expected by the FCA now. Much of my time is spent working cross-functionally, so the likes of legal on rule interpretation, finance and treasury on liquidity management, product on assessing how any new features and flows might impact our safeguarding treatment. We're also heavily involved in testing improvements to our reconciliation logic, and trying to embed more automation and audit trails, because this seems to be the expectations of the FCA around accuracy, frequency, and evidence of oversight. And it's also a time for strategic realignment. We're really looking into whether certain customer flows still make sense for the business, and assessing whether our business model needs to adapt. So my role isn't just about compliance. It's mainly about helping the business understand and design around this regulatory friction, but in a way that's commercially viable.
Yeah, so it's not just ticking boxes, it's actually working
Absolutely.
around everything and trying to find
Yeah.
the most optimal path.
It sounds like you're fun. You've got good buy-in from management.
Trying, yes, yeah. Management have been very supportive, especially with the recent merger. So far so good.
Sorry, Irfan, I just had a quick question, if you don't mind. Just regarding whether you think it'll be a little bit of a shock to a lot of firms who haven't had to go through this type of audit before, when it comes to the costs. Do you think that might be something that yeah, prompt some interesting conversations internally.
With regards to audit?
Yeah, so when they have to go through a safeguarding audit.
Yeah, I think the audit landscape will change significantly. I think as a previous auditor myself, I've sort of witnessed the differences in how audit firms have been looking at safeguarding under the approach document. But that all is going to be standardized when the rules come into place. So those firms that have undergone a very CASS style audit may not see it as a huge shock, whereas firms that have gone through maybe a light touch sort of audit would sort of may find it slightly more detailed and more onerous.
Great, thank you.
And just there will be an audit standard that will be produced by the FRC, so the Financial Reporting Council, which the auditors will have to obviously abide by for safeguarding. Yeah. All right, so the next thing is we're going to have a last poll, and then we can open the floor up after that for any questions. Questions, you can type it in, or if you raise your hand, one of the panelists can allow you to speak. And if you do have any questions that you'd like to raise, if you can just quickly introduce yourself and what company you work for, and your question following that, please.
Yeah, so just the final poll. So would you like to be contacted for a free CASS 15 readiness consultation? Yeah, quite a few people already selecting yes, or potentially later down the line. If you could just drop either myself or Zach just a message just to confirm that it is you who's voted, because I can't actually see who's selected yes or later down the line. So if you just drop one of us a note, that'd be great. We can get that arranged. Great, all done. Thanks to those who took part.
Okay, we can take probably one or two questions now, James. We did want to keep a bit of time for anyone who had questions. I can see Joe has raised his hand.
So I think Joe's just asked, basically just pointed out a couple of points with regards to yeah, kind of the timeline of implementation, and then how it sits under SMCR. So I think just some clarification there, Zach. If I'm not sure you're able to read through the points that Joe's made.
Yep, and the Q&A. Yep. Is this Joe is this Joe Parkhill by any chance?
Yeah, I think it's Joe Parkhill. Yeah.
Hi, Joe. Okay, thanks, Joe. This is very useful. Okay, and then Gareth has a question.
Yeah. So do you think that the overall cost of compliance could be too vast for some firms, that there'll be consolidation and acquisition activity on the market? I think that's
a very good question, Gareth.
Yeah,
I think traditionally payment firms probably don't have as deep pockets as certainly banking and some of the asset wealth management firms. So there could be some consolidation because of costs associated with the sort of increased regulation. Definitely the increase in regulation is quite substantial. This isn't a one level up. This is a good couple of levels, few levels up from the existing requirements. So it will be a shock for firms in terms of how much input and efforts required to increase the current so the current, sorry, just looking at Joe's comment. So it will be a shock to some systems. So firms will be may look at consolidation. So yeah, I wouldn't be surprised. Irfan, you mentioned that the firm that you're working for has just gone through an M&A process, right? So I mean, I don't think that's driven by the increased regulation, but I'm sure that it will help, right?
Yes, yeah, indeed, indeed.
Thanks, Gareth. Any other questions that anyone has?
Okay, so Joe raised the fact that FCA have advised that the rules will now be published at the end of August. Okay, fine. So we've just had that come in probably quite recently. So rules will be published at the end of August with a 9-month implementation phase, with an effective date of May 2026. So we're looking at about a year from now when the rules will be coming into effect. The FCA have further confirmed that there will be no material changes to the rules published in the consultation paper. So that's as expected, I guess, in that respect. And then Joe's mentioned further, end state rules are dealing with more material issues, whereas interim, organizational arrangements. Okay, all right. Thanks, Joe. That's really useful to know that the rules will be published at the end of August, the 9-month implementation phase. So 9 months isn't a long time. You'll be surprised. These things take a long time to get buy-in and to start putting into practice. And certainly when it comes to governance and culture, those things take a lot longer as well. If you have any system updates to make, the rules are a lot more stringent when it comes to reconciliations. I think even in one instance, it's more stringent than the existing CASS rules, actually. So on the external client money rec, whilst in practice, firms do perform a daily external client money reconciliation, the rules, which is a bit of a sort of strange inconsistency in some respects, is the fact that the rules allow for reconciliations to be performed effectively once a month, even though in practice they are performed daily by most, if not all, firms. The proposed rules on external reconciliation for relevant funds is actually on a daily basis. So it's in that case, it's going over and beyond what the current CASS rules stipulate. So that's quite an interesting one. Okay, so look, we are going to send an email with the presentation. Those recent dates that have come in play are super useful, so we'll include that as well. We'll provide links to the consultation paper, links to this recording, and what we're planning to do is a more detailed workshop. So 45 minutes isn't obviously a long time. There's a lot to unpack when it comes to the proposed rules, which look like they'll be going into a finalized state or have gone into a final state. These, the aim of the workshop is to really go through that and go through it in a practical way. So we've got something in the pipeline. It's the 24th of September. So hopefully after everyone's back from the holiday period and have had time to recalibrate with working life, we plan to have the session to go through and provide very practical steps on how firms can really get ready and start putting in the steps, if they haven't, to get the firm ready and in place for once the rules come into play. Okay. So look, from my perspective and from Panjia's perspective, just want to thank everyone for your attendance. As mentioned, we'll circulate slides and a bit more information, and we look forward to presenting and sharing more information on this space. This is obviously the hot topic in the CASS space at the moment, in the CASS safeguarding space. So we'll be providing more insights in the coming weeks and months. James, anything else you want to conclude on?
Yeah, thanks, Zach. Yeah, I just wanted to thank everyone for attending. Obviously, this is the first in a series of events that Panjia Consulting and JCR Talent will be hosting. Any feedback is appreciated, good or bad. It's the first time we've done this, so yeah, if there's anything you want to see next time, please let one of us know, and keep an eye out on our company pages on LinkedIn as well for details of any future events. As Zach mentioned, we do have towards the end of September penciled in for a workshop, which would be I think of real benefit to a lot of those in the payment space. Yeah, huge thanks to everyone who attended. Big thanks to Zach and the Pangea team as well. And yeah, hopefully see you all at our next event. Thank you.